Hi everyone, hope you're doing well. So I'm just going to do a longer video here to go with the short one. That's just about the interest rate changes in the second half of September 2024 in the UK and the US. So before we get started, as always, if you're enjoying the content, please consider going like, comment, and subscribe, turning on notifications. It all helps. And yeah, I suppose if you're enjoying the video, just watch it all the way through. Yeah, so we'll get started. So in the UK, the interest rates sticking at 5%. So that generally means that's the maximum a bank with an easy access account is going to want to pay you. Anything above this, you're making money. Anything below this, you're losing value on your money. And also the same principle applies in the US, which I'll get to in a little bit. So in the UK, there are a lot of accounts that dropped below this 5% mark, because I suppose it's common sense that they will not give you the full 5%. They'll give you a little bit below this. So there's quite a lot of easy access accounts, where you can very easily get the money back out with no penalties, at 4.5%. 4.85%. So really, even if you need the easy access penalty free withdrawals, you don't want to be holding it in a current account, in my opinion. So it's not financial advice, but it's just if you're getting something like 1%, in a current account, it's not great to have that there, because it's you're losing 4% worth of value, every month in theory, or day, whatever the interest is, every period of time that you're keeping it there. So really consider just moving it to a better bank in many ways. So there's the high street banks will often offer 150, 175, £200 to switch a current account to them. So if you think about that as a percentage of the interest, that's a big lump sum of interest that's equivalent to quite a lot, depending on how much you hold in there. So if you're not particularly tied to your high street bank, consider looking into that. Just easy, and you can look at other benefits of particular banks, whether they have cashbacks on utility bills, or good cashbacks on things that you're going to buy regularly. Yeah, if they offer a good credit card that you also want, you can do that kind of route. But anyway, with the trading 2 and 2 account, there's a bit of an anomaly at the moment, which they may correct, where even though the base rate is 5%, the interest is 5.1% shown on there. So technically they're paying you above the base rate. So even if you're just holding cash, which is generally seen as in theory it's risk-free, and it's fairly easy access. Just be aware that even with some of these accounts, they're not instant access, as in if you request the money today, sometimes it does take several days to come. So in a way, it's not like a true emergency fund, as in if you need money the same day, you may want to consider just having a good current account for that, and then just having maybe a secondary amount in here that you need relatively easy access to. But yes, so so they may correct this at some point, but at the moment you're making above the base rate, which considering most people are, banks whatever, are 4.85% and lower, you're making 0.25%, on top of that. If they correct it down to 5%, you're still not losing any money, and that's still 0.15 or 0.25% better than a typical relatively good easy access account. If you're holding money in an account with 0% interest or what have you, then yeah, obviously you're just losing 5% every day or month you're keeping it in there, really, at the moment. Right, so and how does this kind of impact the US? So in the US, they've recently dropped the Federal Reserve interest rate down half, what they call 50 base points. It's 0.5%. So this is down to 4.75 to 5%. So now it's very similar to the UK. And with trading 2 and 2, the interest that you're holding non-invested, that at the moment, 19th of September, is still showing as 5.1%, which matches the UK, which roughly makes sense, I suppose. So if you're just wanting a fairly low risk way of just keeping your money, just bear in mind, with say trading 2-on-2 as opposed to some other banks, you don't get the same protections necessarily with a qualifying money market fund in the UK anyway, on say cash held in traded 2-on-2, whereas if you held it with a regulated high street bank or a regulated online bank like Chip or Chase or whoever, a lot of them do kind of the 4.85 type percentages, and there's not that same risk as you have with a qualifying money market fund. So you get, it's a slight trade-off where, the QMFs are 5% or 5.1% at the moment, whereas the typical bank, I suppose online or high street, is more like 4.85%. It's kind of the best ones where it's easy access. You can get higher percentages if you lock it away or with monthly savers. Like I've got other videos that I'll pop up there, where it's like 10% interest on monthly amounts, that's still around now, or 8.5%, there's ones like that. But just in terms of easy access accounts and just, so just, more for emergency funds, that's, relatively good. So as always, not financial advice, but, if you're just thinking in the short term of, where do you want to hold your money for the time being, just so it's not losing value, there's still relatively good options with trading 2-on-2 is just above inflation for the time being, unless they correct that. And there's lots of just under inflation amounts, but really to kind of build wealth long term, you don't want to be holding large amounts in these kind of accounts anyway, because long term you've effectively got to invest in whatever form that kind of means, to kind of build your wealth. So obviously in terms of stocks and shares, things like that, obviously historically, I suppose at the top end you'd hope to average 8 to 10%, so quite a lot higher than even now, where you get really good cash returns of 5%. You could easily be getting historically you could be getting double that in a investment account. Just be kind of aware that there may be tax liability if you're, say, in the UK but you're outside the ISA allowance, or if you're just in any other country, US or wherever, and you're in like a general investment account, or if there's kind of no kind of, I suppose, tax-free allowances in your country. So just be aware that of that 10% that potentially you're getting annually, you may be paying tax, and just kind of work that into things. So sometimes it's better to pay to things like pensions, where if you're getting tax relief on pensions but not on general investment, it's whether you want to invest via a kind of pension bubble or not, and also just pay attention to what fees you're paying. So that kind of goes on any account really, but if you're putting it in investments, just be aware of what fees you're paying, because on average the brokers do not beat the market. So if the market climbs by 8 to 10%, it's quite a small pool of people who can beat that, on a year-by-year basis, consistently. So if you're paying a large amount of percentage out, to a broker or whoever, just be aware of that. Or even if you're just investing directly with a provider, just be aware of what percentage they're charging you, because I know that the availability in the UK has been poor previously, where you couldn't really get much below 1 or 0.5%. Now you can get ones that are much lower, 0.15%, and that kind of range. So really, if you're still paying 1, 2, 3% in fees, so include platform fees, transaction fees, brokerage fees, whatever, that's really quite a high amount. And while it might seem like a large amount, over a lifetime it'll be, for most people it'll be thousands of pounds. And that would obviously apply to US and anywhere else around the world as well. So just pay attention to fees, and with pensions that would also apply. So just see what, with the provider you're with, weigh up the benefits of staying with them versus the costs of staying with them, and just look into, I suppose, just if there's different options, lower cost options that kind of serve your needs. But as always, financial advice would need to come from a qualified person on that. Okay, Yeah, all for now.